So my background was after leaving university, I joined the financial industry, working for an investment bank. And I worked for investment banks for the first 10 years of my career, ended up at Goldman Sachs, where I ran a large business there advising hedge funds. Then I went to run a hedge fund myself, trading in everything from currencies to stock markets to bond markets to commodities, and then decided to leave the industry and move to the Mediterranean coast of Spain and start writing macroeconomic research for the world's biggest hedge funds and governments and big pension plans, because I'd been in that industry longer than quite a lot of people and had a lot of experience. So I thought I could share that experience and also enjoy living in a different country and having a different life than getting on the subway every morning at 5 o'clock to be at Goldman Sachs for 12 hours a day. It was when I was in Spain, the financial crisis came along. So people will have heard about the great financial crisis that happened in 2008. So much debt had got into the system and people had borrowed so much money that when a recession came, it almost caused a collapse of the entire financial system, meaning that we weren't sure banks were going to work. Was our money safe? All of these things were scary. A lot of people lost their jobs, a lot of people lost their houses. And it was all to do with debt and this financial system. Then 2012 came along, and 2012 was another debt crisis, but this time in Europe, where almost all of the governments in Europe went bust, and they all had to be bailed out by the European Central Bank. They gave them money to try and stop them all falling apart. It was a really scary time. I mean, we had to buy tinned food in Spain because I thought that the supermarkets were going to shut, because it happened in Cyprus, another UN country. Over that period of time, I thought, well, how are we going to get out of this mess? Because the debt levels aren't going down. People now have kind of their economic futures destroyed. So the millennials who had graduated at around 2008 couldn't get jobs. The system was really kind of difficult for people to navigate. And I thought there had to be a different answer. And somebody introduced me to Bitcoin in 2012. And I realized that this is like a financial system that operates outside of the financial system, something we could all use that was safe, secure, and offers an investment opportunity that we could all make money from as well. And it was as easy to put $5 into it as it was to put $5,000 into it. And that's a big game changer, because for most people, if they're young, for them to buy equities is quite hard. You have to open an account, you have to do all of these things. It's difficult. And then can you afford to buy the share? You know, all of these things. But Bitcoin changed that. It made that everybody could participate in this new future. So I think we're at the most exciting phase of the bull market. A bull market is when the markets are kind of rocketing higher. If we compare what happened in the previous bull markets, 2017, 2013, I mean, it tends to go up a lot over this period of time. So we're currently at about 62,000 today. I think it finishes the year probably 200,000, and it might even finish this cycle at 400,000. So this is huge. And then it will correct again and everybody will cry because it will go down 70%, and then the cycle will start all over again. And the idea is this is not a short-term trading thing. This is a long-term vehicle. You want the low prices, because the low prices means you can buy more Bitcoin with your money, because then when it really goes up, you'll make more. So the idea is dollar cost average. You just keep buying, and ignore these huge price rises. They make you feel good, but actually what you want is low prices for a period of time so you can stick money in when it's cheap.